Welcome to the Capital News. I am your host, Alex Karitis. Today is July 1st, 2019. Thank you so much for joining me. Well, the S&P closed at a record high off of the news of the U.S.-China trade truce. Where did the S&P close for the day? It gained 23 points, representing about a 0.8% increase, settling at 2,964 points. Again, that is a record close for the S&P 500. The Dow gained 117 points, the Nasdaq 85, representing a 1% increase. The Russell 2000, the small cap index, gained 3 points for the day. The Dow Jones Transports gained 0.4%, and the New York Stock Exchange gained 0.6%. Now, ladies and gentlemen, if you were following the markets earlier today, all of these major indices were a lot higher to start the day. But they came down, probably in a bit of buy the rumor, sell the fact. Perhaps there was a short squeeze. Some people in the market probably thought, well, maybe there wouldn't even have been a truce, so they were betting against it. They were, trying to get out before they lost their shirt. Any of those things could have happened. Who knows what's going to happen tomorrow? I don't get into the day-to-day stuff like that. You know this. It's not good. It's a fool's errand. There could be a melt-up. There could be a meltdown. I don't like saying these things. Believe me, it drives me insane on a daily basis, saying there could be a melt-up or there could be a meltdown. But this is the world in which we live, because central bankers are at the helm. A president who takes to Twitter, who is obsessed with the stock market, is at the helm. So the markets are on pins and needles waiting to see what's going to be said next. But nevertheless, the S&P closed at a record high. Oil, WTI, is at $58.82 a barrel, so slight decrease for the day. Brent crude is trading at $65 a barrel. Gold remains under $1,400 an ounce, trading at $1,392 an ounce. Silver is trading at $15.19. Uncle Sam's 10-year U.S. Treasury gained 2% today and now is yielding 2.034%, but still right on that two-handle cusp. It's anybody's bet where it's going to go, but you have to look at the bond market, because I always say that the bond market are the adults in the room. The stock market is filled with the crazy children, the frat boys who just want the party to continue on at any and all costs, regardless of what the hangover will bring. So the bond market is telling us they are expecting a slower economy. Well, I wonder what makes them think that. Maybe it's all the underlying economic data that we talk about here on a daily basis, that the stock market just wants to continue to brush off until it no longer can. And I believe that day is drawing ever closer. But we could still see a melt-up because we live in the financial world of Oz. Stay tuned, stay diversified, build cash. When this thing goes down, get ready to buy with both hands. It'll be the sell of a lifetime. It will be the sell of a lifetime. There isn't any cheerleading you can do. There isn't any tweet that can be sent out that can defy the laws of economic gravity for forever and a day. The president is obsessed with the stock market. It really is his Achilles heel. Because, unless he is in charge of it, then you got to investigate that. This is supposed to be a free market capitalistic system. You and me are supposed to be determining the price of assets, not the president, not the Federal Reserve, not any central banker for that matter. That is abuse of power if he somehow has control of what's going on. I don't want to get conspiratorial here, but the man comes out on a near daily basis talking about the stock market. If it's a down day, he wants to send somebody out there to say something's good, whether or not it is, just to try to get the stock market up. So we can say record close, record highs, blah, 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 blah. I want record highs. I really do. But I want it based off of sound fundamental economics, which is not what we have in the United States of America or anywhere else for that matter. Get the picture. Wake up. The VIX, the volatility index, sheds about 7% for the day, now trading at $14.06. So we're going to have to keep our eye on the VIX, because usually when it gets that low, it doesn't stay there that long, meaning there's a lot more volatility on the way. Look out for it. Typically, when you have that type of volatility, it's because the markets are going down. Doesn't mean it's going to happen. It's not set in stone. It's not a blood oath, but it's something that has been the case over the last few months. So we got to pay attention to that. Now, we also have OPEC and Russia looking to continue with their production cuts. So despite the fact that oil actually closed down a little bit for the day from yesterday when we were talking, we don't know what to expect here. We know that the major countries that obviously comprise OPEC and Russia, they want oil prices higher. That is a major contributing factor to their government coffers. So they want higher oil prices. So do oil companies. Okay, there's no question about that. Will they get them is the ultimate question. If you simply look at the demand picture, it's going to be difficult to get there because the economy is slowing down. The global economy, when I say this. We just rattled off a whole bunch of headlines on yesterday's podcast going around the world, particularly where our focus was in Asia because that's where a lot of the data was coming out, but even a lot taking place in Europe. A lot of manufacturing is slowing down. Some of it is even in contraction. This is going to continue to be the trend. This is what we have been talking about for the past several months since this podcast has been on the air. Now, everybody's starting to sort of wake up to it. Ooh, yeah, that's not really good. I mean, this was sort of the talk of the town back in October, November, December of 2018, where we saw that big market sell-off, losing 20+%. We saw that because the markets were anticipating, well, perhaps the economy is going to slow down. But there really wasn't a whole bunch of data out there that was really saying that it was. Now, of course, if you're here at the Capital News, we know how to read between the lines. We know how to look underneath the hood. We know how to conduct that type of analysis to say what's likely going to transpire. The markets were right in having that cautious outlook. But of course, a lot of that was predicated on the Federal Reserve continuing to increase interest rates, Wall Street wanting to throw a hissy fit, want to be a bunch of crybabies. They were going to take their drug away from them. So the Federal Reserve did a 180. All right, we'll wait and see. Instead of increasing interest rates, all right, we'll wait and see. You threw a hissy fit. Stocks lost 20%. Okay, we get you. All right. Didn't mean to say that. And now you have talks that the Federal Reserve is going to cut interest rates. What a joke. What a joke. And you got the President of the United States and his administration out there talking about how the Federal Reserve should cut interest rates and should embark on another round of quantitative easing. The same policies that have destroyed this economy and have destroyed this country because so much is tied in with the economics and finance of this country, which is true everywhere because it's not just economics and finance, it's also social. It also hits the household, it hits the family. It hits relationships. It's very personal. Believe me when I tell you. It's not just facts and figures and numbers and charts. It's much, much more than that. There is a huge human element behind all of this. And that's what bothers me. This is one of the main reasons why I voted for Donald Trump. Because when he was a citizen, when he was a candidate, he was calling out the Federal Reserve. Not to lower interest rates, but calling them out for lowering interest rates and all the problems that it caused. A fake economy, a bubble stock market. Now he's president. Couldn't be happier, I guess, to have them cut interest rates and embark on more money printing. That upsets me like you don't even understand. Because we can have all these other conversations. I mean, on the other podcast today, 91A, I was praising the president. I mean, this is almost like bipolar here. One thing he does fantastically well, the other thing, I don't know who's advising him or if he thinks he's doing the right thing here. Because we can talk about all these other issues. They're small potatoes. They're small potatoes when it comes to what the Federal Reserve does, the amount of power that that institution has, and nobody oversees them. They are technically a quote-unquote creature of Congress because Congress created them, but nobody on Congress oversees them. Nobody questions them seriously. Nobody's going to overrule them. This is supposed to be a system of checks and balances. Nobody calls them in. I guess you can say the president's trying to rein them in, but to do what? Cut interest rates so there can be more inflation, so there can be higher prices? So stocks can make new all-time highs so he can praise himself, because the president did that a week ago. He thanked himself via Twitter. Thank you, Mr. President. Stocks are making highs. I mean, I can't wait to see what he's going to do if there is a melt-up. I mean, my goodness, the man might have a stroke. I hope he doesn't. But he might be that excited if this thing has a melt-up. And when I say a melt-up is going to be something, I mean, it could be as much as 30%. You think that's ridiculous? It is. But that's what could happen in a melt-up. That would be insanity. What a setup that would be for one hell of a collapse. I'm telling you, folks, all you have to do to look how insane this market is just go on Yahoo Finance, look at the S&P 500, max out the chart, and look if that looks normal to you. Ask yourself if that's sustainable. It isn't. It isn't. And then when you look under the hood and you look at all of the data that is deteriorating, that is rolling over, all this manufacturing data, when you look at the consumer, 7 million Americans, 90 days plus past due on their auto loans. And I'm telling you, folks, we ain't seen nothing yet. The auto market, they know what's coming. They know what's coming. There is a record amount of leases that are coming due this year, throughout this year. You know what that's going to do to prices? They're going to tank, because you're going to have a glut of used cars on the market, and you're going to have a huge amount of competition, which is going to lower the price. This is why you are seeing plants idling. This is why you are seeing plants get closed. This is why you're seeing all of this quote-unquote restructuring from all of the major auto manufacturers the world over, because they know their business. They know what's going on. They've been running on a sugar high for several years, and that is coming home to roost. That is coming home to roost, just like so many other things that we talk about here on a daily basis. You want to talk about the subprime issue back in the 2000s that led up to the Great Recession in 08-09? That is taking place in the auto market. Now, the auto market is not anywhere near as big as the housing market, obviously, but that's where the banks and non-banks, the shadow banking system, that's where they went. That's where they focused their attention. That's why you have cars that are as expensive as homes were 20 years ago. People can't afford them. That's why everybody's on a lease. That's why you're going to have record leases expiring, coming due this year. The auto sector knows this. How many politicians are going to come out and tell you this? Nobody. How many of these auto companies are going to come out and tell you this? None. They're just going to you got to read between the lines. Why are they doing this? Well, maybe there's something wrong here. I mean, it's not all automation, although that's going to be the way of the future too. So a lot of these jobs will not come back as we make our way through the 21st century and beyond. It'll be all robots, or a vast majority of them. You'll have engineers walking around, some computer scientists walking around, basically making sure that the robots are working and figuring out how to use the robots more efficiently. So even some of those engineers and computer scientists will be out of the job. That's what's coming. You can't blame China for that one. You can't blame illegal immigrants and the Mexicans for that one. That's technological advancement. We're going to have to get used to it, because we're not having a national conversation on this. But it's coming, and most people have no idea that it's coming. So we got to pay attention to a lot of things. One of the other things that I spoke about earlier on the Geopolitical podcast, which I'm also going to reference here because I know I have an audience that may only listen to one or the other, which is fine. That's why I do too. But one of the things that I stated in regards to the U.S.-China trade talks, and what I've been stating here and telling you guys about for the past, few weeks, maybe even not longer, is the credibility of the President of the United States. And when he wants to come out and make all of these great remarks, these positive remarks that there's going to be a deal, it's going to be fantastic, all of these great adjectives that he throws out there, it's going to be beautiful, all this stuff. And then it doesn't happen. Okay. Over this time, over the past several months, it's really been a one-sided argument. It's been a one-sided sideshow with the president and his lackeys and the members of his administration coming out and saying all of this great stuff. Didn't happen. Where was my concern? What happens if and when the Chinese start to speak up? What happens if you got on one side President Trump and company saying everything's fantastic, and on the other, you have the Chinese saying, no, it isn't fantastic. We got a long road to go. There's a long way to go. Because now, the markets, who are they going to believe? They've been rallying as much as possible when the president comes out, or Larry Kudlow, or another one of his economic advisors comes out and says everything's fine and fantastic, and the markets rally. This, in my opinion, is an abuse of power. This is market manipulation, in my opinion, because the president knows what he is doing. He is not the dictator of financial markets. He is not supposed to obsess himself and occupy himself with what's going on in the stock market. It's not how it's supposed to work in a free market capitalistic system. It's just not. Period. End of story. He's not supposed to be meddling. The Federal Reserve isn't supposed to be meddling. But I guess, hey, what the hell? Everybody else is. Why can't he? Now, I'm not giving up on this. I don't like it. You know this. I'm never going to like it. But that's the world in which we live. But now we have the Chinese coming out saying, you know what? We do have Chinese companies that are leaving China. There are other companies within China that are leaving. Some of them are going to Vietnam. Some of them are going to Cambodia. This has been happening over the course of a few years. Why? Because internally prices have been rising. So these manufacturers are looking for lower prices. They're looking for lower labor costs. So they're moving to Vietnam. They're moving to Cambodia and other countries. They're doing this because these jobs are low skill, they're low wage, they're low tech. Exactly what happens all over the world. U.S. companies want to diversify, they want to leave, they want to lower some of their costs. They outsource it, they go to China, they go to India, they go to Vietnam, they go to Cambodia. They go to Mexico, they go all over the place. This is what happens. This is no surprise. So here you have it now. And who are you to believe? That becomes the question. Who will the markets believe? That becomes the bigger question. Because on one side, you have the leader of the free world and the president of the United States and his administration. And on the other, you have a communist regime that is very centralized, that is very top-down. And let me tell you something, folks. And I'm going to tell you this all the time like I said I would. If the markets believe the latter, that they are going to take the word of the communists over Donald Trump, the president of the United States, we are in a lot of trouble. This is why I have been stating that the president has to be careful about what he says, how he acts. He is no longer the entrepreneur businessman from Manhattan. He is now the president of the United States. His words carry a tremendous amount of weight. He has the great opportunity, a ton of potential to do a lot of great things for this country, and I hope he succeeds. But here he has to tone it down because he is setting himself up to be questioned by the Chinese and for the markets to believe the Chinese over America. And that is a huge problem. That would be a colossal failure of a sitting U.S. president. It would be colossal. There's no question about that in my mind. So he has to be careful. Now it's a truce. Now the president's in no rush. Well, guess who else isn't in any rush? The Chinese. The Chinese were never in any rush. They weren't going to come to the table and admit that they're engaged in corporate espionage, that they're engaged in cyber warfare, that they're engaged in forced technological transfers, that they're engaged in stealing intellectual property. And we're going to come there and admit to these things. That's the gist of this. That's the bulk of this quote-unquote trade deal, this trade negotiation, this trade war. The president, I think, made a mistake going after China in this manner. We talked about this a little bit yesterday. He should have got a coalition together, particularly with the European Union, because with the European Union in the United States, you would have had the world's economy basically right there. That's a 1-2 punch. That's a knockout. China would have had to have given in somewhere, some way. Now, this is just tit for tat. This is now China playing the up-and-coming young lion going up against the mature lion, the United States of America. He wants to take a stab. He's probably going to take a swipe here or there. So this is something that we have to pay attention to because I really don't believe that right now the United States is winning bigly this trade war. We're just not, and we're seeing a whole bunch of economic data roll over. Not because of this, by the way. It's not. This trade story, this is a cover story for underlying global economic data that continues to deteriorate. All this trade nonsense does is it exacerbates it. It just provides people with an excuse, and people love having an excuse. They love blaming somebody else. They don't want to say, I'm a poor manager, I couldn't get my act together, I couldn't move supply chains here or there, I couldn't do this, I couldn't do that. It's somebody else's fault. It's Donald Trump's fault, it's President Xi's fault, it's the Chinese fault, it's the Mexicans' fault. Nobody wants to take responsibility. So it's a scapegoat, it's an easy out. It's an easy out. The stock market's down, oh, well, maybe there's a bump in the road with the trade. I mean, nobody wants to look at deteriorating economic data such as U.S. manufacturing growth, weakest since 2016. The ISM manufacturing PMI in the U.S. fell to 51.7 in June from 52.1 in May. It beat market expectations, however, of 51. Still, the latest reading pointed to the weakest pace of expansion in the manufacturing sector since October of 2016, as the new order index dropped to the lowest since December 2015, and the prices paid index fell to an over 3-year low. You can't stop it, folks. This is economic gravity. It's coming home to roost. When you put that much money, that much liquidity, that much counterfeit currency into the system, yeah, you can get a short-term high. And it's been more than a short-term high. It's been a decade high. It's coming home to roost. And I'm telling you, the sooner we get this out of our system, the better off we will be. The further we kick this can down the road, the worse off we will be. Stay tuned to the Capital News. I'm going to keep you informed. Thank you so much for joining me, ladies and gentlemen. It's been a pleasure having you as always. Please like, share, subscribe, get the word out. Leave your comments. We do love hearing from you. This is the Capital News. I am Alex Karitis. Godspeed.